Greetings and welcome to the video tutorials of our course Principles of Accounting by StudySpace. In this video, we will be continuing with our topic of merchandise accounting and we will be studying about the periodic system. So firstly, we will look at the income statement under the periodic system before we move on to the general entries of purchases and sales. So to begin with, the income statement of periodic system will be exactly the same as the perpetual system, with the only difference that the cost of goods sold will be calculated within the income statement. So therefore, I'm going to draw it out here. Now when it comes to cost of goods sold, first what we're going to do is we're going to write inventory at the beginning plus purchases less purchase returns and our purchase discount. Add freight in. Freight in is referring to our FOB shipping point. After adding our freight in, that would give us cost of goods available for sale. Less our closing stock. Would give us our cost of goods sold. This would be the format for an income statement up to its cost of goods sold. Now we will be looking at the general entries for purchases and sales in our next slide. So for purchases, what we're going to do is we're going to have the same entries, but the only difference is that we are not going to be accounting it under inventory, but in fact specific separate accounts. So the basic entry for the single purchase of goods would be purchases debit and account payable credit. Next we're going to look at the entry for purchase returns. In the case of purchase returns, we would have a similar effect as account payable would reduce and our purchase returns account would be made. Now lastly, in the case of a purchase discount, our account payable would again diminish. And a purchase discount account would open. Which would be credited along with cash, which would also decrease. Moving forward, we will now look at changes in sales. So sales under the periodic system will be exactly like the perpetual, except for the inventory entries. What this means basically is that all the entries that we did that involved cost of goods sold and inventory would be excluded, and instead only the entries that were in reference to sales and account receivable would be performed. A slight difference would be in the sales return entry, in which case the entry would be passed as our sales return debit, our account receivable credit. So that's basically it for our merchandising accounting. In the next video we will be starting a new chapter. For more practice questions and for glossaries, you can refer to the book that we had shared in our curriculum. Hope to see you again in the future videos. Thank you.